One, Sam here, and let's get started. So for those, you guys can hear okay and see the screen, I assume. Looking at the euro at the moment. Okay. All right. So for those new to the session, we use one strategy here, one simple rule-based strategy, all around market timing, identifying where prices are going to turn in the market and where they're going to go. So for those that are new to this sessions, just so you understand, let's walk backwards a little bit. At the end of the day, whatever market we're trading, stocks, futures, Forex, options, anything, crypto, real estate, whatever. The only two questions that matter are where are prices going to turn and where are they going to go. So let's answer those two questions so we know what to look for on a price chart. We know that prices turn in any market at price levels where supply and demand are out of balance. Okay. Meaning you either have more demand than supply, more supply than demand. So what we're looking for is that picture on a price chart, and that's where our turning points are. For example, a trade that we talked about our last session that I think some of you were in. I don't know, anybody with us take this trade last time? Right, so here's the picture of a price point where supply exceeds demand, specifically where banks are selling. Banks are big sellers here. So when prices come back to that level, we want to sell short because the chart is suggesting prices are going to turn here and move down to here. Okay. So the next layer there is what we're looking for as far as turning points is unfilled orders. Why? Another way, here's one of our supply zones. Okay, if we follow our rules, that's a supply zone. A supply zone is made up of unfilled sell orders. Okay. The larger the amount of unfilled sell orders, the higher the probability price is going to turn. So that's why we dive into our odds enhancers and everything else to figure that out. So this level had all that. Next, the second question, where are prices going to go or move to? So filled orders, the opposite of unfilled orders is filled orders. And filled orders facilitate price movement. Meaning, this is the picture of unfilled orders. You should be able to hear. This is the picture of unfilled orders. In here, take a look. I mean, you tell me, is that the picture of filled orders or unfilled orders? All that wide and whippy price action. Yeah, filled orders. Right. That's why you see price move so quickly and freely through that area. Okay. So again, unfilled orders cause prices to turn. Filled orders facilitate price movement. We want to sell short up here, expecting the price is going to drop down to here. This is the trade we set up last time in our session, one of them. Okay? All right. Yeah, that S&P short, so I think we went over that last time too. That was from that was right up here, right? Oops, let me just move that. So there's that S&P level. I'm sorry, the one below that. We haven't gotten up to the upper one yet. So you're talking about this one. Yeah, we had that one, but prices have already, prices have been there. Did you take that one? Were you able to get that? And then, the target for that one, that was up here at 28 even. So there's that level there. Okay, good. And then we had a demand zone down here for our target. Now, again, that's another trade that we took. That one worked out fine. Hopefully you made some good money on that one. But now what about going forward? Okay, so I think we've spent a few minutes explaining, the very basics of this strategy. Obviously, there's details that we don't have time to go into in this session. But now let's look for opportunities going forward. So if we look here in the S&P, I actually had an order in the market a little bit ago. I just took it out, but I might put it back in. When we start with current price, go down and left, okay, we get to this. We're looking for a fresh demand zone that meets the minimum criteria that we're looking for. We have another level sitting just below it. Drop, base, rally. Right? That's kind of at the core of what we're looking for there. Okay, we have our pattern that represents demand or unfilled buy orders. Strong move away from the area. Right, not too much trading at the area. And it's fresh. Price has not been back there even once. Does that make sense? Okay. Now, I keep saying banks are buying here and there's unfilled buy orders and demand and all that. How do we know? Like, how can we be so sure? Well, think about it. If supply and demand were equal at this price point and you didn't have an imbalance, wouldn't prices just keep, stay here and keep trading here? Right? They would, but they couldn't. Right? Why? Because demand exceeds supply. Right here, when prices take off, this is where the last sell order is filled. Right? The last seller sells, and you have, excess demand, buy orders. Right? A lot of buy orders and zero sell orders. Price is going to move higher. The other part of the strategy, to really make sure you're focused on the basics, and again, we could go back to our Euro trade because I know a bunch of you took this, is focusing on who is on the other side of your trade. Like think of buying and selling anything in life. If you're selling something, and I'm sure, a lot of people with us today might have a career in sales. What's one of the most important things you need to understand when you're selling something, for example? What's super important? I'm not even talking about the mechanics. Forget all that. What's most important when you sell something? What do you need to know? Yeah, you want to sell it at a good price. The need. What else? And I can tell by your answers, you really need to focus on the logic. If you understand the logic, this becomes very simple. Forget trading for a minute. You're selling, I don't know, anything. Yeah, what about the buyer, Adam? What about the buyer? What do you need to know about the buyer? What do you need to know? Yeah, who's the customer? Right? Does everybody agree the more you know about your customer and how they think, how they make decisions, isn't that all going to help facilitate the sale, them buying from you? And let's say you're really good at understanding your customer, the person on the other side of your transaction when you sell them something. Aren't you more likely to get a higher price from them? Does that make sense? So let me ask you this. Why would you, putting your hard-earned money at risk in the market where you're buying and selling, why wouldn't that be just as important here, if not more important? You follow me? It's a big part of it, and if you're not thinking that way, and you're not successful yet, or not where you want to be, there's probably a big reason why. So let's look right here. So we're selling up here, right? Our strategy says very mechanically, sell short right here. If and when prices come back. So they did. But when we sell here, who's the buyer? What do we know about the buyer? Are they, now obviously we see what happened here, but what do we know about the buyer? Are they making a good decision, a bad decision? And when you think through that, you can't just think subjectively. You have to think objectively. Yeah, how do we know they're a novice? What novice mistakes are they making? Well, for one, they're buying after prices have gone up. Is that a smart thing to do when you're buying and selling anything? No. What's the even worse mistake? There's another mistake that's even worse. They're buying right at a price point where the chart is telling us major global banks are selling the euro. Does that make sense? Just think of those two things alone, and compare having that information with the person on the other side of your trade versus not even thinking about it. Can you see the difference? Just like if we go back to our S&P, okay? So let's go back to our S&P down here. If and when prices come down here, we'd be a buyer. Who are we buying from? So now we're not selling it. We're not trying to sell at retail prices. Now we're trying to sell at wholesale prices. Who we're trying to buy at wholesale prices. Who else is really good at buying at wholesale prices? Walmart, Costco, right? Those types of stores. Goldman Sachs, JP Morgan. They're all great at grocery stores. They're all great at buying at wholesale prices. That's all we're doing here too. But what they need to do is be really good at finding the people or groups that sell at wholesale prices. And I mean true wholesale prices. Right? How does Costco make so much money? Think about it. They're really good at buying at wholesale prices. And then when they sell to us, what do they tell us? What's their message? It's actually part of their sign. What does their sign say? It says Costco in red, and what's in blue? What's the blue word right under Costco? Anybody recognize? Everybody know? What does it say? No. Close. Begins with a W, but it doesn't say warehouse. What's the blue word under the red, under the Costco? Yeah, wholesale. Wholesale, yeah. Why does it say that? Because what they're trying to tell you is, if you come in here, you're going to pay wholesale prices. But who really paid wholesale prices? Costco did, right? We can talk trading, we can talk Costco or Walmart. It's all the same conversation. Like now we're looking at a chart of the S&P, but if this were a chart of the prices of toilet paper, wouldn't we be having the same conversation? Nothing's different. These are wholesale prices here. We just looked at retail prices in the euro. My point is, and I don't want to spend too much time, on this, but your brain needs to be thinking that way. Because if it's not, trust me, you'll end up buying at retail prices and selling at wholesale prices. You don't want to do that. All right, let's keep going. By the way, I can look at any market you guys want to look at. I've got my little list here. But yeah, we can look at gold. There's a little, we actually have a couple levels in gold to go over. So for gold, we're going to start with the 60-minute chart. Oops. Yeah, it's falling. So in our other sessions, we've been tracking these levels up here. So we have retail prices up here, supply zones. We are expecting prices to come down to here. So ideally, you would have hit these supply zones first. We didn't. So we go down to a 5-minute chart, knowing that there's room, and pretty easy room for prices to come down to 1305. If we go to the just little 10-minute chart, we also have a supply zone up here at 1325. So there's about 20 points of profit zone in there. Okay. Offering about 5 to 1 at least. Makes sense? But nothing really else to do before then. Yeah, we'd really need prices to get up into the 20s. I mean, we're at 18, so that can happen. So some of these markets are in the middle of moves. We don't want to take action there. Sure, we can look at let's look at the pound yen. And just wait for a little data here. Okay, we always want to start with the larger time frames. And, we're not getting a lot of help there, so let's come down to a smaller time frame. Here's the daily. So what you want to pick up by looking at the daily, for example, is, yeah, we're running into a little bit of supply up here, which is why prices are turning lower. But then sitting down here, we have some demand. So at least very quickly, in about 5 to 10 seconds, I know that in the larger time frames, we're closer to supply than we are to demand. That's information we want to, think of as we go to smaller time frames. Let's see here. Okay, so we would look to short a rally back up to supply. If I come down to the small time frames, though, the problem is we don't really have a quality supply zone to short against. Yeah, even this little 5-minute chart. So at least right here, I'd probably leave this alone until you got, closer one of these two levels again. Either a new high into this level, the 149, 50 area, puts you in fresh supply zone territory. And then down below, just below 142, is going to put you close to that demand zone, right? Yeah, let's look at GBP. Okay. Well, yeah, you're going to have more zones on your smaller time frames, but if you're following the rules, it should be pretty easy to pick the right one. Okay, and profit zone has a lot to do with that. Okay, profit zone is what's going to help you decide on, that level over that level, for example. I'm just looking back in the chat. So yeah, this one is, let's take a look. All right, so this one's been stuck up here right in this supply zone. It looks like we have a little demand kind of close, but let's go to a smaller time frame for that. Let's see. There we go. Yeah, so not a ton right here in the area. What's jumping out at me is if you look below current price, all this price action here, we've been back here so many times. There's so much trading activity here that there's probably not a significant amount of demand in that area. If there was, the picture wouldn't look like that. You'd have a little demand zone and price would take off and not look back. So it's, this picture is suggesting the floor is not that strong. Again, just because the orders are filled, that's the evidence we have. So if we look below that, we see that, you have a nice big profit zone that opens up right down here to about the 135.70. I'm sorry, 135.60 area. 135.30 to 60. We just need to find a supply zone to short against for a move down to that level. No, the only reason why so there's nothing magical about these time frames. I just want to, if you just want to, we just have to look at different kind of X-ray snapshots of these markets, these levels, so we make sure that we find, exactly where the orders are. Okay. All right, let me just scroll back here. The Aussie dollar. Yep, we could take a look at Aussie. Okay, here's the Aussie chart. The Aussie's been a mover with some really good opportunities for us. Let's not look at that one. Yeah, here. I thought I had some levels on this chart already. But let's look. Yeah, this one. You know what? On the Aussie futures, I do. So, but let's put some levels in here. So remember, we start with current price and go up the price ladder. And these levels will be a little bit on the big side, but that's okay. Again, larger time frames. We just want to know where we're at, kind of that larger time frame supply-demand curve. That way, when we go down to smaller time frames, we already know what side of the market is carrying the greatest odds. There we go. There's that one, and here's this one. Okay. I'm not sure which one you're talking about. Are you talking about the upper one or the lower one? Okay. The supply. Well, I just took the whole range of the base. That's all. Okay. Yeah, we always want to just stick to our rules, follow our rules, stick to our rules. No reason to yeah. All right. So here's our larger time frame supply-demand curve. We're still in a fairly big time frame. So what this tells us is we could be a buyer or a seller on the smaller time frames, but we also want to know that not too much farther below is demand. So we want to get married to a short position in this market, at least from these prices. Okay. All right. Now when we come down to the 60-minute chart, we can see this level really starts. Now we can get some pricing going, right? The ideal buy would be about 78.05, with your stop below this area here. And then, of course, we have a really nice supply zone above. It has our normal odds enhancers and a couple others. This level comes in at 78.62. At 78.62, I'll put some lines in here. We'll take this trade. We'll track this trade. Okay, there's that one. All right, let's put our little box in, and then we're all set. Oh, great question. So the question Ronnie's asking is supply and demand the same as support and resistance? No, not at all. Very different. Which is why you don't hear me using those terms. So there's a reason why you don't see people making a consistent, low risk living trading anything in the world of conventional technical analysis, whether it's the chart patterns or tools like support and resistance, right? Or the indicators and oscillators, things like that. They all have the same problem. Here's the thing. So let me go to Let's go back to one of the levels we were looking at. Let's see if the S&P is going to move in the right direction for us. It's not yet. Okay, that's all right. We'll wait. So let's look here. So here's one of the many flaws, for example, of support resistance. And let's look at a real trade that we took here in I think it was our last FX Street session. So I think you understand by now. Here's the evidence, the picture that shows us that supply exceeds demand. Josh, that's an interesting way of thinking about it. Then price comes back here, and we want to sell short. We want to enter here. What support, the rules around support and resistance, one of the big ones is how you identify a resistance level, for example, and how you draw a line around it, and then the action you're supposed to take once price gets there. Well, if we think in terms of resistance here, so once you have this line or this line established, now you're supposed to draw a line and carry it forward and call that resistance, correct? Like once you have this pivot high or this pivot high, which are basically the same pivot high, the rule is now connect those two, because you need two pivots or what have you to connect a line, to draw a line, right? Now you cannot connect that line and draw it, carry it forward. And then what are you supposed to do when price comes back to that level? What action are you supposed to take? Right, when price comes back to that resistance level, you're supposed to sell short. Right? Yeah. So can you start to see the glaring problem with that? Remember, the only thing that's going to cause prices to turn lower are unfilled sell orders. Every time price comes back to this level here, some of those sell orders are being filled. Here, more of those sell orders are being filled. And the next time, you're going to have more orders filled. So, in other words, the rules around support and resistance always have you buying and selling at price levels where the odds are really low of price turning, because there's no buy or sell orders left, or very few, to cause that turn. Does that make sense? And that's just one of the flaws, but there's many more. Again, what support and resistance says is don't take the high probability trade. Wait until it's a low probability trade and then take it. But believe me, you're never going to hear professionals or Wall Street or anybody else tell you that support resistance or that stuff doesn't work, right? Anybody who really gets trading, supply, demand, all that, is kind of hoping the rest of the world doesn't and keeps trading things like support and resistance. The other problem with all that stuff is it all has you buying after prices go up and selling after prices go down. But that's a whole nother topic. Yeah, let's look at another one. Yeah, Zoab, maybe look that up and then we'll talk about it. That one has too many flaws to even think about or talk about. Yeah, the Canadian, we really want to start with the larger time frame and then work our way down. Okay. Hang on. Let me scrunch this up. That's not going to scrunch enough. Yeah, I mean, the Canadian, I would kind of, I don't know if there's a whole lot to do here. Anyway, let's, to find supply, though, what we would do is put a horizontal line across the high, and we're going to scroll back until we hit that line. We might have to add some data. Oh, there it is. All right, so we're looking above current price. So here's your really nice supply zone. Okay, so that's 131.37 to 131, looks like 65-ish. Okay, again, this is a 60-minute chart, fairly big time frame. Anyway, nice pattern. It's fresh. All the odds enhancers are at play here, or most of them. So I think this would definitely score out to be, well enough to actually take the trade. Let's scroll forward just to make sure it's fresh. Yep, this is on a tear. Okay. There we go. Okay. Good. So does all this stuff starting to make sense? A lot of times we just come into these sessions and start finding trades and taking trades, but it's important that you understand the logic behind it so you can make the information yours. Okay. So there's my email address. If you have any questions, need any help, if you want me to look at a chart, just send it away. But sseiden@tradingacademy.com. I just put it in the chat. It was good being with you today. Nice little mix of learning this stuff and hopefully get enough trades out there, and we'll track those and go over them next time. Okay. Yeah, so you sell at supply and you buy at demand. And again, if you have a lot of basic questions on strategy, just shoot me an email. I can get you some more information. But yeah. All right. Well, have a great day, everybody. And we will. If you scroll up, it's there. sseiden@tradingacademy.com. All right. Well, thanks, and we'll see you next time.